next on our agenda is the last panel discussion, which is on the future of payments, digital currencies for a digital future, which is a very interesting topic. And we have a few interesting speakers and moderators. The moderator will be Mr. Robin Amlot, Managing Editor, IBS Intelligence. The speakers will be Mrs. Andrea Tushinho, I'm sorry if I didn't pronounce it right, Director of Studies, Prospective and Training, Partelia Consulting, Dr. Martha Buckenfield, Thought Leader, Metaverse, Advisory Board Members, Gen 2, Mr. Diederik Brugink, Head of Innovation and Payments, European Savings and Retail Banking Group, Mrs. Valeria Waharovska, Co-Founder and CEO of Fondi Online Payments.
Live as part of the FinTech Europe Summit, our topic is the future of payments, digital currencies for a digital future. My name is Robin Amlot. I'm the managing editor of IBS Intelligence. And with me on our panel for today, I have Andrea Tushinho, Director of Studies, Perspective and Training for Partelia Consulting, Dr. Martha Buckenfeld, Thought Leader, Metaverse Advisory Board Member, Gen 2, Diederik Brugink, Head of Innovation and Payment, European Savings and Retail Banking Group, and Valeria Waharovska, Co-Founder, CEO, Fondi Online Payments. So we are talking about digital currencies. I think the first thing we have to do, given what's been going on in the cryptocurrency markets in the last few days, is try to define, if we can, what the difference is between crypto and digital currencies. So would anybody like to make a start on this? Any volunteers to talk about the difference between digital and crypto?
I would say, maybe I start, Robin, if I may here.
So
the question that you raised was, are digital currency and crypto the same? And for some, maybe on this call or on this stream, this might be very, very obvious. But what you can say is that the digital currency is a digital format of fiat currency that you carry around in your wallet or withdraw from an ATM. So it's more or less same like cash, but in a digital format. And what's very important is that digital currency is usually backed by an authority, while it's cryptocurrency, which we know very well from just the press, for those who are not in the cryptocurrency, let's say passionate and aficionados people, cryptocurrency is not backed by a central figure, but it derives from purchasing power from its community of users. So let's take the Bitcoin, let's take the Ethereum. So from a technical point of view, it's pieces of code, you can say, and they are created by what is called mining. And it's what some maybe remember digital ledger called as blockchain. So they are on a blockchain and quite different because they are encrypted, hence the cryptocurrency. But the most important factor is who has the control, and the control is with an authority on the digital currency side and with the users, you can say, from the cryptocurrency side. And then there are a couple of other differences in terms of stability, as we have seen recently. Then there are also differences in terms of legality. So in some countries, you have seen that crypto is not allowed, and we could expect most likely also, I think Robin will come to that, from the recent Bear Stearns moment, as it's called in the crypto field, the rush on Terra and UST, that nightmare what happened, that there are a lot of questions around crypto as well right now, even though it wasn't crypto, it was a stable coin.
Does anybody, that's an admirable summary of the situation. Does anybody want to add anything to that or argue with anything that Martha has said?
I think that everything's quite clear and it was explained really very good, because especially from my opinion, still, if to speak about the technology side, it's quite for sure, like it's like similar, and it's everything related to, again, about like the technology of blockchain. But for my personal opinion, for sure, like digital currency, it's still like if to speak about how it works, it's more centralized because it's still like more regulated and according to some like direct currency. And if it is like crypto, it's more decentralized system, for my opinion.
You say the technology is the same. The blockchain is not the currency. The blockchain is a distributed ledger technology that both will be using, whether it's a cryptocurrency or a digital currency that is under a regulatory format. And of course, we have something, it's a cliche to say we have something of a Wild West, but we do have something of a Wild West in cryptocurrencies. There has been massive value creation, massive value destruction, and I would just throw my next point into the mix at this stage. Has crypto given the concept of digital currencies a bad name? Has it actually damaged the prospect of the take-up of digital currencies?
I would say definitely yes. If we look at what the market, as you described it, is like due to the terror, also terror, you can say. So with
I think we need to spell this T-E-R-R-A. You're talking about the currency that collapsed, the stable coin that collapsed, not the feeling that its collapse engendered in so-called investors in it.
Yeah, absolutely, absolutely. But that costed the market, it exploded 1 trillion. So everything, so that was stable coin, but everything else was affected. We have seen that in the market also with Bitcoin. I think Coinbase had a really incredible, nice little video where they said Bitcoin is dead, Bitcoin is dead, Bitcoin is dead. And then they put every year when someone said Bitcoin is dead, which was quite, we know the crypto winter, so it was quite over some time. So I would not say that crypto is dead. I wouldn't say digital currency is dead. And there are a lot of talks. Also, I was last week at the World Economic Forum in Davos, where also a representative from IMF said, let's not mix apple with pears and with bananas, even one said, because it's all different. So you have the digital currency, you have the stable coin, you have the CBDC, which is more from a centralized authority, and then you have crypto. But I would definitely say from a reputational point of view, a lot of people, and I would really also love to listen to you, to your retail customers. I mean, they must be completely freaking out, and I don't know if who provides in your area also cryptocurrencies eventually to retail clients. They are so scared. Yeah, that's why they're also all pulled out. I mean, it's quite clearly to see in terms of transaction volumes.
Well, what's been happening in the cryptocurrency markets is what always happens in an unregulated market. People climb on board bandwagons too late and jump off them too late as well. They miss the ride up, they get the fall down. That happens all the time. You see that in financial crash after financial crash after financial crash. And if you think it's not going to happen again in cryptocurrencies, I've got some tulip bulbs I'd like to sell you, and there's also a bridge in Brooklyn that's got a for sale notice on it.
Yeah, so very, very clear. Yeah, that's what I meant before. That's why the press has called it a burst dance moment, because in 2008, we basically, in the financial crisis, we had the same situation that all the people would go and have a bank rush. So something similar happened here, exactly to what you described.
All right, let's move on. Unless anybody wants them, please feel free to jump in and make your point if you've got something that you need to add to the discussion. Let's move on then to the outlook for digital currencies. Digital currencies for a digital future is our title. What do we mean by that? What are the digital currencies that are actually going to... Bitcoin is not useful as far as I'm concerned. Digital currencies are going to be useful. What are the uses we're going to put them to? What are they going to do for us? What are they going to do for economies, etc.? Anybody like to begin on that?
Yes, if I may, please.
Please, Andrea.
Thank you. I think that to answer this question, it is important to speak about central bank digital currencies, which is a form of regulated digital currency. We see that many central banks in different parts of the world are working about this topic. So it is important to have in mind that the project of central bank digital currencies is to offer a complementary tool in the context of digitalization of payments. The purpose is also to create a new asset to foster digital inclusion in some countries, like for instance, Brazil. So there is a social purpose in this topic. It is, for instance, the case of Europe with Digital Euro projects. And as I mentioned, Brazil, which works about this topic at a very social aspect.
Anybody else want to come in now?
Yeah, if I may,
Diedrich,
may add,
let's hear from you.
I didn't introduce myself yet because there was some confusion about the actual starting time of the panel. Apologies for that. But indeed, as mentioned by the moderator, Robin, I'm the head of innovation and payments at the European Savings and Retail Banking Group, which is a trade association of banks in Brussels. And as a payments expert, of course, I'm pretty keen to look more notably at the payment-related aspects of the whole debate today, because that's also part of the title. I think on digital currencies, especially CBDCs, and looking at the payments functionality in mind, I think globally you see that the various central banks that are either studying or introducing it have different policy objectives that they want to achieve with the CBDC. As Andrea mentioned, financial inclusion can be one of them. Another one could be a kind of a defensive strike, I would say, against when the projects started, against the development of coins like the Libra or Diem and what have you. Another policy objective could be to just gain sovereignty about your own digital payment means, because we see that a lot of payments, especially in the consumer domain, made with cards, are dominated by schemes that are domiciled in either the United States or in Asia, and these schemes can decide or being imposed upon by the regulators to cut off certain countries, as we see, for example, happening in Russia at the moment. If something like that would happen to Europe, it would be quite devastating. So it can also be sovereignty in the payments domain could be a quite important objective. Another objective could be indeed to cannibalize cash or to move to more cashless world. For each of these objectives, of course, these policy objectives, you could argue whether it's a good objective or not, and what type of solution could fit into that. But we will come more to some payment-related aspects later in today's discussion. So I'll leave it here. Thanks, Roland.
Okay, I just want to pick back up on a couple of the things you said there, talking about the way digital currencies get used and what they be used instead of. As an individual, what am I going to manage my digital currencies with? Would I have a card? Would I have it on an e-wallet? Would it be on my smartphone? How would that work for an individual? Or would an individual not interact with digital currencies? Would it purely be something that's bank to bank, whether it's central bank to banking institution?
If I may, and after that I will give the floor to the ladies. But it fully depends also on how this digital currency will be positioned. If it's a pure retail payment method, of course we need to think about, and I think the jury is still undecided on the how this is going to make available to the public at large. But what we also have to keep in mind that for the public at large, they have different options in which they can make payments nowadays. You can use the good old cash. You can use your card. You could, with let's say, fiat money or commercial bank money on there. You could use a prepaid card which has e-money on there, which are already three different notions of money. And the last two, probably for the average consumer on the street, is already digital money or electronic money. And if you now come to add an additional digital type of money to the equation, which then, of course, this time is different from the other two digital ones because it's backed by a central bank and it's a direct claim on the central bank. It could even confuse consumers if they don't really understand the difference between those payment methods. So I think also there's an important role for those that are involved in disputing the digital euro or the digital currency that comes to educate customers what's different by when I use my MasterCard or use my digital euro card or wallet or whatever is being put in place.
I think the first thing that one would have to do in terms of educating the retail consumer about the kind of digital currency we're talking about, and we are going to enlarge upon further down the track in this conversation, is that it's not a digital asset in the way that Bitcoin might be still. It does not go up and down like a yo-yo in terms of price. It does not double in price. It does not halve in price. It has much more of a stable value. And I use stable with a small s because we don't want to talk about stable coins because we have the example of Terra, which I can only describe as an unstable coin. So I don't want to get into stable coins. They're not part of this discussion. Non-fungible tokens are not part of this discussion. We're talking about the kind of digital currencies that will work in the economy of the future. That will be the payments of the future. So on that basis, Martha, please.
Yeah, Robin, maybe a couple of points to take up also from what Diederik said. So from a user point of view, in my view, it has to definitely be on smartphone because as Diederik also said, the user is used to Apple Pay, you can say, is one of the biggest providers. So it's all very easy, it's on the smartphone. So definitely the medium any user would expect is that, quite simply speaking. And then Diederik also raised very good points on the concerns maybe which are out there. So how to control it, how to regulate it. We know that the ECB has taken now a couple of years until 2023 to actually come up with a framework for digital euro. And we also know from what Diederik said that there will be cash and there will also be a digital currency. So why is that? I think Andrea mentioned a point that inclusiveness with digital currency is higher because you normally can reach more people. On the other side, if you don't have 5G or if you don't have reception in that area, you are lost if you don't have a cash potential for grocery shopping or anything like that. So there are a lot of consideration. Then if we think about China is very far advanced with a digital currency, the CBDC, which they want to launch. And they are due to launch very soon. We are in Europe definitely behind. But it's also, when you think about it, you can see every transaction. When I say you, the authority can see that. And that is another concern, I think, from a consumer point of view, which one has to take into consideration talking about it, because obviously China is very keen on having a CBDC here, not surprisingly, I would say.
I wonder how many window cleaners, painters and decorators would be keen on a CBDC. How much of a given economy, and it's a large chunk, is the so-called black economy? Because the great thing about cash is that it is anonymous. This, of course, is where things like Bitcoin may still have a usage in an economy. It's anonymized. What you're talking about as a CBDC would not be anonymized.
No, it's not anonymized. And that's a challenge, I would say, also from a consumer perspective. So, Robin, whilst I understand you have a bit of a hate-love relationship with Bitcoin and the like, or maybe more a hate, I don't know. But there are certain, I would say, certain things which work very well. So we have seen that things worked partially well with the Ukraine crowdfunding on crypto, but on the other side also there were a lot of concerns of what kind of money is this there, because it's anonymous. So always when you give away your, let's say, your data and what you do your entire life, it's a big step for privacy, I would say.
Okay, let's get into some of the nitty-gritty about this, though. We're talking about specifically, I guess, and Diederik, you were the one who underlined this, CBDCs, central bank digital currencies. The currency that is going to be controlled by an authority or have some influence put over it by an authority. What makes for a CBDC? What are the building blocks that we need to have?
Yeah, of course, it's a central bank backed currency, and so from that point of view, it's like cash. It's a claim of the central bank, and not on your commercial bank that you otherwise would bank with. Which then also would mean that the key question is how these CBDCs going to be distributed to the public at large. What we understand here in Europe from the ECB is that they will use the licensed credit institution to distribute. So that means that in fact you can go to your bank and to transform a part of your assets, being in your current account or in your savings account, into a digital currency, into digital euro, whether that's being held in the app of the bank one way or another, or in another digital wallet, or being put on the card. That's still open for discussion. But that also means that in fact, when a consumer decides to withdraw digital euro from the bank, it means that his current account is being debited and his digital currency account is being credited. Which means that from a bank's point of view, it basically also imposes risks because if all consumers of banks decided to convert all their assets into this digital currency, it would be the equivalent of some kind of digital bank run, which would then, of course, shorten the bank's balance sheets and also limit then the capabilities of banks to perform their lending and consumer financing capabilities. So that's also other aspects that need to be taken into account when thinking about how such a digital currency could be designed. So now changing my head, but as an advocacy person, we certainly propose some cap on maximum holdings that consumers could have in a digital currency.
I'm going to bring in a couple of questions from the audience now. Somebody is saying, don't we need to start with a secure and portable digital identity first, the true owner of the e-wallet, so that we can provide custody for retail? Is this not something that comes with a smartphone, or is this something extra that we need?
Yeah. So maybe in terms of digital identity, the way how there are different ways now how it could be done, but there is one, I would say, which is in the market right now the most favorable. That is, even though we don't want to talk about it, is NFTs, non-fungible tokens. I'm sorry, but that is just, I think that is just how it is here. So from that point of view, Robin, I don't know if you agree that is definitely you need a digital identity, obviously, to get somewhere.
Yes, I mean, well, it makes sense. You've got to have a digital identity. If you don't have a digital identity, where are you going to repose the digital euro or the digital sterling or the digital dollar that you've just taken out of your cash account, as it were, into your digital account? Somebody, so that was from Dan Feeney. We'll go now to Paula Fernandez Ortega. When do you think traditional banks will start basing their business on blockchain? Well, I think to a certain extent, traditional banks are already basing part of their business on blockchain, aren't they?
Yeah, absolutely. Think about JP Morgan. They have 200 people in a special unit called Unix, where they have they're only dealing with blockchain. So they also have their own coin, the JP Morgan coin. So they are very, very, very heavily involved. And you have all the other big guys, basically Deutsche Bank in Germany and so on. They are all working on blockchain, and they are all looking at how to do, for example, custody wallets. To your points, where do you take it? Where are the wallets? And BBVA is very advanced on that matter. So custody wallets will be what financial services can or banks can provide. And I think the big topic here is the trust people have in banks is much, much higher than in other companies, at least in fintechs or the like. At least for the normal retail customers, we obviously have the adapters, the early adapters, which go faster, but the rest of the retail market will look for banks to find solutions. So custody wallets will be very important.
This is
just
one...
add an example about blockchain. It is a case of France, where the French regulator Banque de France realized an experimentation based on blockchain. The experimentation is called Madre. And another example in Europe is the case of Italy. Italian banks are very engaged in blockchain works, and it is also considered as a basis to the works about CBDCs in this country. So it is a very interesting to see these two countries about blockchain.
I'm going to ask this next question because I just love it, and it's one that I've pondered myself over the course of the last few years. Are we talking about a solution to a problem that doesn't actually exist? Surely payments work quite satisfactorily at the moment, and indeed in real time already. We have a multiplicity of payment rails, both national and international. You look around any country, particularly in Europe and in North America, there are various real-time payment systems already in operation. There is a smooth running system. Do we really need a CBDC? What problem does it solve?
That's a very good question, and indeed, I think I hinted you at posing it during this panel, Robin. But indeed, if we look at, again, with my European hat up and at the euro area, in 2020, 101 billion cashless transactions were made in the euro area. On top of that, of course, still significant low-value transactions in cash. But this 101 billion transactions is showing a 6.8% growth rate over the past 5 years. And again, also keeping the pandemic in mind, it still shows a staggering growth. If you look out of this 101 billion transaction, 47% are made with cards by consumers, and that's even showing a growth rate of nearly 10% over the past 5 years. So that means there is a very healthy cashless payments market that's already functioning. So the key question is, with all these cashless payment methods on the one hand and the cash available on the other hand, where is this specific digital euro going to fit in the equation, and what will make consumers make the decision to start using the digital euro, or what will make merchants to start accepting the digital euro, which comes on the one hand to the capabilities of those that are going to distribute the digital euro to come up with value propositions so they can attract consumers and move them away for cards maybe. But the problem is that for cards there is a proper functioning business model in place. The key issue in notably business to consumer payments is that typically consumers don't want to pay for the privilege to be able to pay, whilst the merchants are happy to pay a very small fee for the privilege of accepting payments. And of course, in the cards world, it has been solved by a kind of a reverse mechanism called interchange. But for cash, we don't have these type of mechanisms, and for the digital euro, it's still up for grabs. So again, where will it fit in? But second, where are the incentives and the proper remunerations for all the actors to actually step in a possible solution?
In terms of how business deal with it, I'm going to cite an example for you from India, where I was a few weeks ago. I was talking to the head of BharatPay, which is one of the largest payments processors in India. And they offer free payments. And the reason they offer free payments is because the data they derive from handling all these payments allows them to make more intelligent lending decisions. So they offer free payments, free immediate real-time payments to their customers. And as far as they're concerned, it's just the price of doing business because it gives them the information they need to make intelligent lending decisions. So that's the angle of a business making sense of how payments work for them. In terms of how payments have worked for you, Valeria, you're in the online payments business. How was business over the last 2 to 3 years?
It was exciting because on the one hand, there are a lot of targets, as you know, that they just dropped down, especially related to tourism, but there are a lot of businesses which really had a big success. And for sure, there are a lot of subscription business such as Netflix and all of them, because people, they spend more time at home, and for sure, they start spending a lot of money also using different online services. And that is a good question. You mentioned that maybe there are no problems related to general to payments, because everything is really very good. We have SWIFT, we have Visa, MasterCard, we have everything almost. But to be honest, it's not true, because especially I think that even now it's quite clear that the problem related to cross-border payments was not solved. And for my also vision that for sure there are a lot of still opportunities related to security to make payments much more better. Also for the digital currencies, it is about security. It's also about cross-border payments, because again, still for my opinion, digital assets and digital currency helps to improve the cross-border payments and also involve more countries in the payments, and it helps to solve the problem with the related to cross-border payments. And it's really because if you think that there are no any issues and no any problems related to movement of money from one country to another, it's not true. And for my opinion, that it helps really a lot during the next years to improve also the question related to payments, and especially to move and to maybe unify in some, on the one hand unified, because it will be some just a couple of currencies, but still if to speak about the technology, it will be much more secure, and also it will be much more also clear how it will work and unified in this case.
Well, there's an interesting point to be made about digital currencies, whether, as a consumer, I may take comfort from the fact that it is a controlled currency by a central bank, whichever central bank that happens to be. But the key word there is control. Do I want people to have that economic control over me? Certainly, governments and regulators want that control. And of course, one of the strongest arguments maybe that's put forward by proponents of cryptocurrencies is that it isn't they and what they offer are independent of authority. So let's move on to, and this follows on from what you were saying, Valeria, another question from the audience: the role of the public sector versus the private sector in offering new payment solutions and improving cross-border payments. Valeria, should your company not come up with the killer application, the one piece of software that's going to make cross-border payments so much simpler, would you do that? Or is it something that you think you should step back from and expect the public sector to do?
No, for sure. I think that it is also the role of private companies to do this. And for sure, we will do all the best to also to bring some impact on the market and to develop the scheme, or also payment scheme, which will help to work with the cross-border payments in a much more easier way. And it is generally our goal to simplify. And I'm not sure that generally it's this part of business and the payments part, that it should be generally the public role.
Well, one of the steps on the road to the future of payments, even before we get to digital currencies, and we'll dispose of this quite quickly, I think, is open banking and account-to-account payment. That perhaps could fundamentally simplify, fundamentally change the way payments are made at the moment, could it not?
It's a good question, thank you, because there are two things. First of all, open banking it's a great idea, but still with a lot of complexity and related to technology. And it's a good question that open banking, it's like a new one way how people can pay, and it's quite like should be generally closer to card schemes model how it works. But in the result, if to speak about like open banking, how it works, for example, if to speak about recurring payments or even like refunds, it's still not the best way how you can manage, especially for online business. There is why on the one hand, yes, it's one of the way how you can make the payment from your accounts. Again, like because it's cheaper, because it's maybe you don't need in this case to use your cards. But if to speak about specific products which online business they need, because they have different requests and compare with the normal retail business, for sure, unfortunately, for now, online banking cannot support this technology.
One of the things I think I can see happening in the future is that I'm going to end up managing a portfolio of currencies. I'm going to have sterling, I'm going to have euros, I'm going to have dollars. Oh, and by the way, I'm going to have a digital version of all three of them as well. So that, where are we up to? I think that's 6 currencies I'm up to straight away. Sterling, digital sterling, euro, digital euro, dollar, digital dollar. Then yes, all right, maybe I'll have some crypto, maybe I'll have some NFTs. This is going to be very complicated for the individual to manage. Anybody want to comment on that?
Yeah, for example, BBVA, which I mentioned before, with also digital wallet, they're working on a hybrid model. So where you basically have what you have today, and they're preparing already for the future. So with all the digital currency, the non-fungible tokens and everything, so that they can cater for this. And there are a couple of fintechs also here, in particular also in Switzerland, which are dealing with this problem now. So you can open a normal bank account, and at the same time you can have digital currency. Yeah, so in some way. So it's quite interesting from that point of view that this business model of banks will also change substantially. And there's a very good report from Capgemini on this topic, where they talk about the digital asset and hybrid model in terms of an ecosystem, because the banks will, from a technology point of view, not be able to do it all themselves, and they don't have to. So they are really dedicated partners, which they can choose, what you also proposed in the sense of it's not only the central authority, it's private companies working also with the central authority, working with the banks.
And where, or indeed how, do central bank digital currencies fit into the overall payment mix?
Diederik, did you want to say something?
It was more to the previous question, where I assumed that Robin's question was not only hinting at how to distinguish between a normal, let's say, wallet and a digital currency wallet, but having accounts in different currencies across different banks, how open banking could help in some kind of account aggregation services where a fintech could step in and show the consolidated view of balances across various banks in one single snapshot, which is, I think, one of the account information services models that's being exploited by some fintechs also in Europe, leveraging PSD2 access to bank accounts, but also for these fintechs, as well as for the banks that are behind that suffer, of course. The key question is what's in it for the fintech, where is, in the end of the day, the money to be made. Attracting customers is one thing, which might be good for your valuations in terms of if you consider an IPO at some point in time. But if you look at whether the business model is sustainable in providing a free service like that to consumers, that remains to be seen on the long term. But to come back to the second question, indeed, how do CBDCs fit into the overall payment mix? I already hinted at it at the beginning of the previous discussion point, whether it's a solution of a problem that doesn't exist. The key challenge is, and it is also hinted at one of the questions posed here, We have the payment products I mentioned, notably for consumers, if they want to pay, it's either a credit transfer for invoice-based payment or maybe a payment initiation services, open banking. Direct debits can be used in circumstances. There's e-money, there is cards, and indeed instant payments will certainly also be a kind of hopefully some killer to some maybe card payments or cash payments. And with all these new payment methods, if you then introduce a new class like CBDCs are, the key question is again how will it fit in? Of course, you can distinguish between the fact the West is made on using fiat money or indeed in cash, and this is made in guaranteed central bank money. One could then argue, okay, in an instant payment is also very close to real-time settlement, maximum 10 seconds. So where's the difference? So the key question is indeed how can this how can the market position the product? How can the market develop value-added services or premium services that on the one hand make the product appealing also to compare to the other payment products? And one key problem that needs to be solved in order to facilitate that is the remuneration model.
All right, I'm going to get into some of the nitty-gritty of how this is going to work now, and indeed when it's going to work. This is another audience member question. Which benefits of blockchain technology does the panel think would add most value or improvement to a proposed CBDC? Can we actually quantify that? Because I don't suppose you can actually have a CBDC without blockchain being involved. Does anybody want to say anything to that, or have I just disposed of it, saying it's not going to work without?
Yeah, maybe completely agree with your statement. Without blockchain, no CBDC. I think that is a given. So all the advantages which blockchain usually has, it's first in speed, it's very transparent in terms of the record. It's clear with the disadvantages I also mentioned in terms of this transparency. It's a very good technology, and all the advantages it has now. Normally, in particular, transparency I think is the highest value for CBDC. How the authorities look at it. Yeah.
Okay, let's stay with our head under the bonnet though. I want to talk about how something like a digital euro or a digital sterling or a digital dollar is going to work. How, and also how soon? Realistically, first of all, let's take a vote on this. Let's hear from everybody. When would you expect to see a CBDC in Europe, whether it be it euro or sterling or indeed any of the other currencies in Europe?
If I may give some insights about this topic. So considering the works of ECB about the digital euro, we see that it is nowadays a huge topic developed by ECB. There is a working group composed of several professionals that is dedicated to this topic. It is managed by Fabio Panetta, Italian representative of ECB. So ECB already published many works about digital euro, like reports, and also a public consultation about this topic. And we know today that many countries contribute to all these works, like France, the Netherlands, Italy, with the action of Italian Banking Association, and also Portugal, where the national regulator manifested its ambition to participate to all these works. But I think that it is important to have in mind that many questions remain today. One of them is the role of commercial banks in this topic, the place of digital euro in front of other means of payment, the business models also, and the communication towards other stakeholders of the markets, and above all the end user, the consumers. So I think that digital euro will not appear tomorrow. Many questions have to be worked before a real appearance of this innovation inside the European market.
Okay, I still want to put people. I still want to put people on the spot here. So, Diederik, please, by all means, carry on.
Just to add what Andrea said, indeed, I'm personally involved in some of the groups that Andrea mentioned. And we have to clearly understand that the ECB is not working on an implementation project of the digital euro, but it's in fact an investigation phase that lasts for another 2.5 years before an actual decision will be made on whether to introduce a digital euro or not. Between you and me, I believe it will be a fait accompli that the digital euro will be introduced, but they're still into investigation. What problems should it solve? I think they have some views there. But the key is more indeed how to implement it. What would it look like? What are issues to be solved? And indeed, they are asking all kinds of platforms, stakeholders to come up with the input. But what interestingly we see happening in parallel is that of course, if the digital euro is being introduced in Europe, it's not a sole decision that the ECB can take themselves.
It's a political decision.
But now you see indeed, but also the proper legislation need to be in place. And what we saw that the European Commission launched about a month ago, a consultation on because they're considering to issue a specific regulation that could accommodate the introduction of a digital euro, because it basically touches a lot of different existing regulations. For example, should it be legal tender status or not? Or by the way, what does legal tender status mean? Does it apply the Payment Services Directive? Does that apply to digital euro? What about AML, CFT, and anti-money laundering and counter-terrorism financing type of regulations? A lot of touch points with legislation are being touched with the possible introduction of digital euro, and you see also now the European Commission paving the way for such a possible introduction already.
Well, I am going to say that everything you said was trying to qualify what you said first of all, but what you said first of all, I believe there's a certain amount of inevitability that there will be a digital euro at some point. Now, the question is, and I'm being mischievous here, can we actually quantify, accepting all the caveats you've just given me about what needs to be sorted out first, can we put any kind of time scale on that? Is it 10 years? Is it 15 years?
No. I would just make a best sorry, yeah, Diederik. I would be brave and just make a best estimate, because from what you and Andrea said, it's 2023 when the ECB comes up with a framework. So let's say we have another 2 years of implementation in a good scenario, then it's 2025 is my best estimate. And we have seen that 87 countries are involved in general in looking at CBDCs. And as soon as we have already 9 countries have rolled it out. US is a little bit behind, UK is a little bit behind, Europe is behind, but the more also US pushes, the more UK pushes, it might be that this also helps the acceleration. But definitely, it's quite clear there will be a digital currency, in my view.
And within our lifetimes, one trusts, since it's only 4 years away.
Yeah.
Anyway, I think we are just about out of time, unless the organizers want to tell me different, but I believe that we have used up our allotted time. So I would like to say thank you very much to Andrea Tuchinhill, Dr. Martha Birkenfeld, Diederik Brugging, and Valeria Wacharovska. And I think we have discussed successfully digital currencies for a digital future. Thank you very much, ladies and gentlemen.
Thanks a lot.
Thank you. And thanks colleagues for being here. Bye-bye.
Thanks.
Thank you very much, Mr. Robin Amlot, for moderating a wonderful panel discussion and enlightening a lot of audiences with us. Thank you very much.
You're welcome.